Hello, everybody, and welcome to the Speaking of Insurance podcast. My name is Aaron Bollinger.
I'm Brian Bollinger.
Today, we're going to be talking about why accountants should care about insurance. Why should they, Brian?
Well, obviously, one of the fundamental things that every business needs to have and every person in their life needs to have is insurance. And the idea that, you can be a professional accountant without understanding insurance is quite challenging. It starts in the beginning, right? Every year, you're going to be helping your clients essentially allocate costs in terms of it's a business for their insurance premiums to their, through their books. And so it starts like, for example, if you had a person who is a building owner, they might have a portion of their premiums would be property insurance, a portion could be liability insurance. And some of those things can be state specific, can be very complex. One of the challenges that we have as agents and brokers is trying to communicate how premiums apply to the accountant so they can do proper accounting either for state filings and or for federal filings. And also in some cases you have multiple locations that might even have different owners for different places. They could have multiple LLCs, could be a single policy where you have a primary owner, but there could be sub-owners or minority stake owners in certain projects or certain locations. And making sure you properly allocate cost is one of the fundamental things that accountants need to be able to do.
Okay, so as us as brokers, insurance brokers, that is, how can we help an accountant navigate that, or how should they already know those things, or how could they get educated on them?
Well, sometimes people just go with a naive model, right? They'll either go based on, number of buildings divide by five, right? So in some cases, they'll go number of square feet. Some insurance companies even do it simple like that. However, a lot of times it's based on other factors. Could be insured value, could be occupancy. There's a number of factors that go into it. Like recently, we had a client where they had a brother and a sister who had multiple buildings that they inherited through their family trust. And, certain people are responsible for, like the brother had certain locations, the sister had other locations. One of the occupancies was incorrect in the policy or had recently changed. They need to get updated. So it went from being an office to being a restaurant. That obviously is a substantially different business tenant to have, even as a landlord. And so the rates are substantially different. So what ended up happening was we had to go back to Travelers in this case and actually get a cost allocation model, exactly how they specifically broke down and underwrote that particular package policy so we could help the, essentially help the accountant adjust the allocation of the premiums.
So obviously that sounds like a very, tedious process, having to understand that as a broker and then having to go through that as an accountant. How can we, bridge that gap between that insurance knowledge and the accounting knowledge? Also, how can they learn to review these policies and understand these policies, and why is that important?
Well, I think at a high level, the cost allocation is one of the functions a lot of times a bookkeeper does at a business. And so sometimes the accountant isn't even aware of what's being done or how it's being done. So I think that ignorance is bliss theory is sometimes possible. Obviously, you do have to rely upon your client to help you, provide actual financials that are supported with documents and data. But then in terms of the actual coverages and things like that, it's kind of another whole level of discussion. And I'd break that down into, I'd say pre-claim. So that's kind of like understanding what the building values are, property values are, personal property values are. In some cases, some of these accountants might be, working as business managers for famous people or family offices, and that's a whole nother kind of avenue to explore.
Whole other avenue to explore. So again, obviously the relationship that between the accountant and the client, and then the client and then the broker, that client is kind of in the middle there. So how can we make sure that client is getting the best service from both of them? I mean, obviously you understand, parts of accounting, the accountant understand parts of insurance, but that relationship there with especially the bigger clients, the more expensive ones, that should be something that's been established.
It depends on the complexity of the operations. Again, some clients are very simple. They have one location, one set of policies, very, very straightforward. Nothing really to engage the agent or broker on specifically. However, it could be something as simple as just occasionally asking, "Hey, have you reviewed your, schedule of property to make sure that you're properly insured, like for an inland marine policy, if they have high articles, value articles, or if they have a lot of tools or equipment in their particular, business or personal life." And so those kinds of little just questions on the back end can kind of show that you're aware of it. Another thing that can happen is sometimes people have multiple agents or brokers, and there's nobody actually helping them on the insurance side. And so in that situation, the accountant is essentially de facto insurance agent, whether they want to be or not. And I think that they need to be aware enough of the insurance products that are offered, enough of their clients' exposures to at least be able to say, hey, maybe you should consider a personal umbrella policy, or maybe you should consider increasing your, professional insurance, or, increasing your liability insurance.
Yeah. So those limits, understanding like the amount of income a business could be having or the amount of exposure a business could be having. Obviously, those some of the time go hand in hand. But like you say, it's important to understand the type of client, right, and the type of insurance that that client might need. Because just having that foundational understanding could really prevent a lot of different things happening to that client that could eventually save the accountant some time, or the pain of having to see such a client that they might have a personal connection with go through something that could be so hard, especially like a loss that could have been covered by a personal umbrella.
Yeah, and it's even more fundamental than that, right? I mean, even things like life insurance, right? I mean, estate planning. There's a number of facets of insurance that accountants need to be aware of. And a lot of them are, to be quite honest. I mean, some of them I've even heard might even know people, or refer people to sell life insurance to their clients, which again is a whole nother set of conversations to have. And even the ethics of some of these things need to be explored. And if there is any sort of, revenue sharing, those things should be disclosed appropriately to all parties. So there's no, hidden referral networks and those kinds of things.
Yeah, so you had just mentioned like the referral network between those and the life insurance. So what type of like legal issues could they come across when they're, giving a bunch of referrals or feeding this broker all these life insurance leads of some of their older clients, and maybe they're not giving the best pricing, maybe they're not giving the best coverages, and they're just pocketing the check. Is that something that you have seen or could be seeing potentially in the future?
I don't see it with professional accountants. I mean, I'm sure it happens out there. I'm sure people do things like that. I think the bigger issue, though, is just making sure that the clients are being served, that they're aware of what their options are, and that they're educated as best as possible. Even things like supplemental healthcare plans for Medicare, having Part D for the drug coverages. Every so often, just checking in, especially if you're elderly, clients or retired clients, to make sure that they've got a plan in place for their insurance needs. Again, it's the goal here is an accountant, I would say, would be to help prevent the client from having an unexpected loss or an uncovered loss. Now, if somebody doesn't have any money or they can't afford it, obviously there's probably not engaging an accountant. But the people that are typically talking to professional accountants and CPAs, those people tend to be above average wealth, above average education, and really their exposures tend to be above average, which means, the accountant needs to be above average.
Yeah, all the more reason to have also an above average broker, right? Somebody who actually does the insurance side of things, right? The accountant, while they're dealing with the finances and all those things, the insurance broker should also be, like you say, covering the liabilities and whatnot. So some of those liabilities involve, claim processing. How important is it for an accountant to understand that process with an insurance company?
Well, the claims process is probably one of the more complicated things that can happen, right? I mean, in this situation, I'm not going to explore the whole, liability loss scenario, because I don't think that a typical accountant will get involved in that. I'd stick more to the traditional property valuations and then marine losses, fire losses, theft losses, these kinds of things, which I think the accountant should be a little more, involved in, a little more aware of. A lot of people just honestly don't know what stuff they have until after there's a loss. And so again, even something as simple as saying, hey, when was the last time you took a picture or filmed inside of your house, all the stuff you have in there. God forbid something happens, your house burns down, tornado hits it, earthquake, whatnot. I think it's important that an accountant just kind of occasionally mention that to the clients. Obviously, every year when you complete your CPA, paperwork that you're sending in to the CPA, there are questions about uninsured losses. If you had an insured loss, there are certain things that do come up in those forms. Again, but I think it's also important that the prior work has been laid down, so there's a proper foundation to make sure that your client is protected in the event of a claim. And then the second part of that is helping them through the claims process, which again, having good documentation does help. We've also seen, like with business interruption claims, that's an idea where, let's say your client is a plastics manufacturer and they've got a factory with injection molding machines, and a fire happens in their facility and they're down for 6 months. Well, all those sales they would have had, all that money that would have been collected, all the payrolls and things like that, depending if they're properly insured or not, would be essentially something that could be collected from the insurance policy. Obviously, the insurance policy has terms in it like business income with extra expense, which helps your client get up and running faster and helps them basically sustain the business so that they're not out down and out, right? A lot of clients, or a lot of, I should say, insureds, or I should say business owners, honestly, that have a claim, a lot of them unfortunately do go out of business because they're either not properly insured, they don't have a plan in place to rebound, and or they don't have proper insurance to help them kind of through the hard times. So again, this is where the CPA can help, an accountant can help, an insurance professional can help. Ultimately, a business owner does have to make business decisions for themselves, so I don't want to underestimate and say it's everybody else's fault. But again, you think about it, CPAs, accountants, insurance agents and brokers, and their attorneys. These are the professional team that most business owners need to have, and very few of them actually have that team. And I can count on my one hand, essentially, how many times I've had a meeting with all three of those parties present with any of my clients. Most of them are so disjointed and so in their own silos that there's no like cross communication. There's no cross, ideas, flowing back and forth or exploring like, hey, this is my concern in this contract. How can we fix that? That goes to the insurance agent or broker. The agent or broker says, here's how I think about doing that. And then to flow back to an accountant or a bookkeeper or a business owner to say, hey, what does that mean in terms of cost? Who's going to pay for it? A lot of times, people sign contracts, they don't read them. And so that's a real thing.
Yeah, I mean, continuity, like you say, and that sort of like, understanding between all the parties, especially from the accounting side of the insurance side in terms of finances. I mean, obviously the lawyers have it in like the legalities and things like that of contracts. Of course, they have to understand those things, but the accountants, maybe they might not have that level of understanding in terms of, the fine print in these policies. Like you had mentioned, what happened when, a business were to go down, right? If a fire were to happen and operations were to be paused, would your thing be covered, right? And some accountants might not have that knowledge of that policy, right? So examples like that.
Yeah, and I also don't think that honestly that a CPA or an accountant should be giving insurance advice to too much of a degree. I think it's more of asking the right questions to kind of prime the thinking of the business owner. So the business owner goes to their insurance agent or broker or reviews their insurance policy and make sure that they're properly protected. Again, I'm not saying that the onus is on the CPA or the accountant to make sure that everything is done properly at all times, but you do need to be at least aware that conversation can be greatly appreciated. I can think of a couple claims we've had where somebody had a fire essentially burn down their factory. And once that happened, it was one of these questions, well, what was the business income? That begs the question, what were the sales? Was QuickBooks updated properly? Did they have a proper accounting software? What was the payroll? A lot of times, if there is a loss of a facility, at least historically, people just had paper records. Thank goodness now a lot of people have electronic records and they can recreate them easier, but nonetheless, it's still something to keep in mind.
Yeah, having proper records, right? Making sure that you're working hand in hand with your accountant so that they have the proper records, so that everybody has the proper records, so that the insurance company, again, has the proper records, right? Like, again, like you talked about the unison and the working all together. So how do you see the insurance contracts and compliance working with business continuity and whatnot?
Well, it's a whole other area I think that needs to be explored with accountants and CPAs, right? A lot of people, they say the number of baby boomers that are retiring every day is a pretty large number. And in the next 5 to 10 years, a very significant number of these business owners are going to be selling, right? Or retiring, either being, or having health issues and needing to leave the business or workforce. So one thing to keep in mind is that, you as a CPA, that's something you should have a conversation with your clients about, and helping them keep clean books. So in the event they do want to sell is another kind of side value add thing. And a part of that could be making sure they have insurance in place for all their business operations. And why that's important is because if you don't have good records or you don't have a good insurance program in place and there is a claim, obviously there could be no coverage for that, number one. But number two, if you are going to be possibly selling your business in the future, the better and more complete the records, usually the higher sales price your clients can get. And so little things you can do to help prepare that business for, continuation, whether that's with the owner, with handing it off to the next generation, or even selling it, needs to be something that you're at least mentioning to your clients.
Okay. Yeah, I think you might have lagged out a little bit there. Maybe it's just on my end, but I mean, the bigger picture is that, it's really important for them to understand it, especially when they're transitioning. So could you help explain the difference maybe in that between an occurrence form and other different types of forms that might be seen by accountants?
Yeah, accountants, I think, are like a lot of people, right? We kind of think of the typical auto claim, right? Did you have coverage in place at the time the car accident occurred, right? That's an occurrence form policy. There is a whole nother type of policy called the claims made policy form. And actually, a lot of accountants' professional liability is still written on an occurrence form policy, so thank goodness for them. However, a lot of other professionals, it's written on a claims made policy form. And the claims made policy form essentially states that the policy needs to be in force at the time the claim is made against you. So when that lawsuit is filed, did you have insurance in force? There's a second part of that test, though. You had to have purchased that insurance before whatever event trigger they're claiming occurred. So there's kind of two parts to it that need to be aware of. One is they call it a retroactive date, and the other one being what date the claim is actually made against you.
So things like errors and omissions insurance and things like that, what are those usually written on?
Well, it depends on the field. Again, some are still written on an occurrence form, but it's ever reduced number. I mean, every year it's less and less and less. I'd say we're probably at a point now where 90+% of those sorts of policies are written on a claims made policy. The other thing that also accountants and attorneys need to be aware of is employment practices liability insurance. This is a type of policy for, wrongful termination, discrimination, sexual harassment, these kinds of things. And there can be additional added coverages we can put on from time to time, depending on the client situation, for things like some defense if there's a wage and hour claim or some other thing. Sometimes there are sublimits we can get. There's also directors and officers policies if you're a larger business or you're planning on going public or being sold. A lot of times directors and officers insurance is something that our clients tend to want to look at.
So can we go into more depth with those type of things? I mean, I think it'd be really important too, not just for their knowledge in terms of their clients, but for themselves and making sure that they're properly covered. Could we get a little bit of information on, the limits, how important it is, the depending obviously on how many employees and where they're practicing and how big their practice is?
Yeah, we'll get into that, I think, maybe in future episodes, and it's every situation's unique, so I can't give generic advice. But what I can say is if you do have a claim, the probability of you feeling like you have enough coverage is probably not going to exist, right? It's like one attorney once I said, actually, when you need the insurance, you can never have enough, and the rest of the time of it, it's a waste of money. That's kind of in my line with my clients for a while. And when there was an attorney that once said, well, the second part of that, Brian, is may insurance be your best waste of money? I think a lot of people look at expenses on the accounting side and they go, do you really need to have that umbrella policy? Do you really need to have that liability policy? Is that something that's really value added for you, or can we cut it? I think it's kind of short-sighted for a lot of people. There's this assumption that insurance companies make significant sums of money off the premiums that they basically bring in. However, I think a lot of people are now aware with the claims in California that there are insurance companies that have actually sustained more losses in an annual calendar year than they brought in premium, which mathematically, of course, means that they have that potential of being insolvent. And so it's important that you realize that risk mitigation is there. Also, that the premiums may not be quite as unfounded as we'd like to assume.
Yeah, we always talk about the rising prices, right, with all of our clients, and we have to sympathize with them in terms of, the amount of money that they're spending on it, but also how much is it worth, right? How much is it worth to be able to operate your business and know that if something were to happen and you've got a good broker on your side, obviously, and good policy forms that you're covered and that, your business can go on and continue.
Yeah, it's a little more nuanced, of course. I mean, you don't want to just waste money on insurance. Nobody does, right? And, but one of the things that we're also seeing happen is there's been a huge inflation in terms of what the claims are settling. So if you have an attorney that's litigating an auto claim, something that used to be a minor fender bender, 10, 20 grand, not the end of the world. And all those claims do get litigated. So, you're probably not going to get into this. But one of the value adds that a lot of brokers do provide is making sure right now, just a number of claims out there. Obviously, everybody sees billboards in the freeway for attorneys. Those seem to have a pretty strong correlation to increases in number of litigated claims, which also tends to have a pretty strong correlation with increase in auto losses. So if you look back 5 or 10 years, it's been a pretty, except for the COVID years, of course, it's been a pretty strong correlation of growth in those areas.
Yes, I drive by them every day. I mean, I know everybody else does, right? I mean, it's crazy how much money they must be making to be able to put all those billboards up as well. And I mean, obviously making sure that people get the correct settlement for the accidents that they get into. But some of the accidents are just, frankly ridiculous, right? Like you scrape the side of a car door and it goes for $100,000, right?
Yeah, again, these are the challenges we see as agents and brokers, right? Is once the claim has occurred, there's very little we can do to actually put the genie back in the bottle, right? So all of our efforts as agents and brokers are on risk mitigation, on trying to create a
Before the
environment and
loss.
culture before the
Before.
loss.
Yeah.
On the back end, we can't help influence the outcome. I'm not going to lie. We do have conversations, but the reality is once you get attorneys involved, our little bit of pressure we can apply, it doesn't really do as much as we'd like.
Yeah, I mean, we aren't the professionals who are, settling the claims. I mean, obviously, we do our best to walk our clients through the process, through the existing coverages that they have, what they should imply based off of the fine print and the policy definitions. We've done that a lot, haven't we?
Yeah. One thing I also want to mention for you in closing too, it's even things like workers' comp insurance. Accountants and CPAs sometimes and bookkeepers, they tend to help with the audits, the final audits for workers' comp. And there's things that matter there, like what are the job duties of the employees? Are they doing roofing? Are they doing framing? Are they clerical? Are they outside sales? There's a number of class codes that essentially have different rates. A percentage of the payroll is applied differently based on what the actual employees are doing. So sometimes you'll be asked to help complete a final audit and you need to essentially document very well, who's doing what so that you get them in the right class code. Another part of the final audit people sometimes overlook is you're not supposed to pay premium on overtime. What I mean by that is you'll pay it as if it were standard time for a number of hours worked, but if it's time and a half or double time, at least in California, you're not supposed to pay double, 1.5 or 2 times the workers' comp premium. It's as if it were just standard time. So again, making sure you're aware of these little nuanced things can help save your client significant money.
Could you walk us into more detail of that? Give us an example of one of those things that discrepancy might happen.
Well, it can happen either way, right? You put everybody in clerical, but nobody's clerical, right? And that could constitute insurance fraud. So you certainly don't want to get too close to that side of the equation. But the other side of it is, you might have a situation where, they call it a field service person, but in reality, that person is now a manager or now now doing outside sales, or halfway through the policy year, that person transitioned, got promoted, and now they're a sales manager. Well, that's a fundamentally different rate. So, not just thinking about it as a fixed term for the whole policy, but being able to have that conversation with your client, like, hey, did anything change over the course of a year? Did anybody's occupation change or job changed? And the way workers' comp works, though, if you don't keep separate records, it does get applied to the worst, highest rated class code is how the final audit is supposed to be applied. Again, encouraging your clients to keep good records as to who's doing what, when, where, and how, at least on a regular basis, is really important.
Yeah, and also discussing with your insurance broker if there will be any, if any class codes where something could possibly become something. Let's say that you have, one class code where your plan is to pay somebody less than $32 an hour for doing painting work, right? If that were to ever increase, that would need to be reflected on the final audit. I also wanted to touch on one thing. So you had mentioned the overtime hours and the coverage there and how that rate might eventually be equal to the same thing. I wanted to get a little more detail on that and explanation or example.
Yeah, I think that's something best. If somebody has a question, they can contact us directly. Again, and again, every audit is unique. So in different states handle things differently. So I think it's best that we don't go too far down the rabbit hole of those sorts of specifics. But I did want to say too that, even things like wage and hour, that's making sure that people are getting paid properly. A lot of times that's a bookkeeping function in the business, and maybe the CPA is not involved with it, the accountant's not involved in it. But, there are claims that come out of people not getting paid, or, there are terms like prevailing wage. Some of our contracting clients do sign prevailing wage contracts, and you need to make sure you keep separate and distinct records for those projects so that you're, reporting those properly, not only to the insurance company, but that you're reporting those more importantly, properly to your employees' paychecks. Because if they see that they're not getting prevailing wage rates, they might have a legal claim against you. And that's something that we want to try to help our clients prevent.
Yep, prevent, right? That's our job. We can do our best before, we can set up all the policies, but in the end, once that claim goes through, then, we're out of our league.
We try to be defensive, right? We try to encourage people to be proactive, not reactive. Also, once there's an attorney involved, again, there's a limited number of things that we can personally do. So again, the goal here is to help our clients be protected. Hopefully the accountants can get some good ideas from this conversation today. And if they want more information, they can contact us or let us know some specific questions and we can go into more detail.
I just had one more question. What's one takeaway that an accountant who's currently, middle to larger size in their practice could take away from this conversation in terms of, what they should know about insurance?
I think they should know the fundamentals of the policies, the different types of policies. They should know how they work. They should have an idea of what some risk mitigation factors are, what some loss control scenarios are. They need to at least be aware of it because a lot of times, again, they do act as like more of a business manager than just an accountant or a CPA. And so if they are going down that path, I think it's great to know what resources are available, what techniques and strategies are available. I think those can be invaluable to your clients and help them hopefully, avoid losses and hopefully become long-term partners with you.
Beautiful. Yep, that's what we're looking for, right? Long-term partners, insurance, accountants, everybody, right?
Yep. That's it. Yeah, we're here for the long run, right? We got to be here for the clients, right? I mean, first and foremost, the clients need to win, the employees need to be happy, and of course, we need to help them make those things possible.
Yep, that's what our job is to do, right? Help people as much as we can. So thank you guys so much for listening. And next conversation, we might be talking about lawyers and helping some lawyers out. So
Or something different. Talk to you next time. Thanks so much.
bye, guys.